Are women better at making money on the stock market than men? Study shows that actually, yes, they are. I'm going to tell you the 5 reasons why women are better investors than men. I'll also tell you what you can learn from women so that you become a better investor too. Let's dive in. Different studies actually do show that women are better at stock market investing than men. There are studies from, among others, Berkeley, Warwick, Fidelity. There's a famous studies from Barbara and Odean. You can Google these, but I'll give you some of the highlights. One of the most famous studies, it's the Barbara and Odean one, shows that on average, women outperform men by 1%. And it actually shows that single men do even worse than married men. So single men underperform more by 1.44% compared with women. Other studies have different results. The Fidelity one says that women outperform men with less than 1%, with 0.4%, less than 0.5% on average. But over time, that actually is quite a significant difference. So what are the 5 reasons that women are better at stock market investing, better at getting a higher return? Let's dive into that part. First of all, they shy away from risk. They tend to study things that they know, things that they like within their zone of competence. And that's a great advantage when you're a stock market investor. Men, on the other hand, they have a tendency to invest in the next big thing, in the thing where you will make a sentence like, this is going to be the next Amazon or Google or the next whatever. It's not there yet. Nobody's heard about it, but they really believe in the potential of the company or the product instead of seeing what is this product actually doing for people today. They have a little bit of a tendency to find lottery tickets, the next big thing. This could be things like biotech companies, companies that don't even have anything on the market yet, which is typical of many smaller biotech companies. It could also be a company that do have something on the market, but it's very small. It doesn't have a lot of users yet, but it sounds very promising. So the next big thing. The second reason women are better stock market investors is that they tend to forget their investments. And that's actually a good thing in some cases because they have less of a trigger finger. What do I mean by trigger finger? The trigger finger is the one that will go buy, 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 sell, sell, sell. And sometimes when you're a stock market investor, what you actually need is patience. You need some time for the hypothesis of your investment idea to unfold. And the other thing is that people are emotional beings. We can get really, really triggered. We can get greedy and we can get fearful when the stock market drops. If you forget about your investments, you have less of a tendency to become greedy or fearful. This is backed up by the studies, by the data. One of the studies says that women buy stocks 9 times every year, whereas men tend to buy stocks 13 times a year. This is the Warwick study. Another study says that men trade 45% more often than women. And it even says that single men trade 67% more often, almost 70%. That's a lot. The third reason women are better stock market investors is that they actually do the homework. Women spend more time getting comfortable on the stock market before they invest. And sometimes just doing things can be a great strategy, but in stock market investing, it's really good to have an idea of what the traffic rules are before you go into the traffic. I can definitely recognize this pattern. On my own investment courses, 8 out of 10 are women. Whereas if I look at who follows me, it's actually mostly men, especially on YouTube. And men are very active when it comes to making comments, especially comments that are bragging about how well their investments are doing. Well, women are more quiet, but they actually do the work. They study, they get comfortable learning how to do it. I see that women on my investment courses actually dive into the annual report of the companies before they invest in a particular company. The next reason is that women are more patient when it comes to investing. And I can't help but wonder, does this have something to do with how we are wired biologically? Women carry babies, and it takes 9 months for a baby to be ready to be born. And there are long stretches of times, months where you can't see anything. We feel that there's really important growth going on, even though you can't see it on the surface. And any woman who has been pregnant knows exactly what I talk about. While you can't see anything, The baby will be growing a brain and a heart. Things are actually happening, but it's not visible. And we know that. For a man, on the other hand, it would take him 30 seconds to make a woman pregnant. So maybe they have biologically, maybe they're wired more to fast action, do more, get more women pregnant. Well, that, of course, is just my own homebred theory. And you can laugh about that for sure. But maybe we are wired differently. If you scan a woman's brain, you will see that there are different connections in the brain. So maybe when it comes to investing, they have different reactions and more patience as well. Now, when it comes to patience, it's really great to be patient if something you've invested in falls, if the stock price falls. The stock market, it's volatile, and the way that the price of the stock moves isn't always connected to reality. That's how we think as value investors. Let me just back up a little bit and explain what value investing is. So within investing in the stock market, you have two big schools. One school believes that the market is efficient. So whatever price stock has, the stock price, that would be the correct one. That's what that school believes. That school is called the efficient market hypothesis. It believes that the market is efficient. You can hear it in the word, efficient market hypothesis. You can also hear that it's a hypothesis. It's just an idea. They view the market as a big, efficient machine, and people are rational beings. On the other hand, you have the school of people who do not believe that the market is efficient. The market is not efficient because people are not rational beings. Why are people not rational? Because they're driven by emotions. Not always, but it happens. And in investing, emotion would be mostly fear and greed. Greed you can also call FOMO, the fear of missing out. And greed is the reaction when stock prices fall and you really want to sell it because you're afraid it's going to go to zero. Now, when the market is irrational, when people are reacting to fears, it's really great to be patient. And if you have studied the company, like women have more of a tendency to do, you know when to be patient. Now, the fifth point is that women are better at moving on when they experience a loss. Here it's really important to distinguish because it might be that the stock price has fallen, but you trust that it will get back up as the market isn't efficient. If that's the case, women are actually better at just waiting it out. But if it's a real investing mistake that they made, they're actually better at getting out before the men. They're better at just accepting, okay, I made a mistake. I'm going to sell it. I'm going to move on and I'm going to invest in something else. When you accept an investing mistake, you will more quickly regain whatever you have lost by making a different investment. Those are the 5 reasons why women are better investors. What can you learn from this? Well, you can listen to what women are actually doing and do the same. So that means, first of all, figure out what you're investing in. Don't just go into something that sounds very promising. Figure out what it is. Invest in something you really believe in. Invest in a less risky way. Secondly, sometimes it's actually a good idea to just let it be. Forget about the investment for a while. Thirdly, do your homework. Before you dive into something, figure out what the traffic rules on the market are, and also figure out what you're actually invested in. 4, be patient. Just because stock prices fall doesn't mean you've made a mistake. Sometimes you need to wait it out. That's easier to do if you made the homework and know the traffic rules. And lastly, if you really did make a mistake, sell it, move on, and get into something else. Now, obviously, none of this is investment advice. You always have to make your own decisions. This is education. If you want to learn more about the traffic rules, I've got an ebook down below that you can download. In that ebook, I will actually tell you how to figure out what a company is worth so that when there's volatility in the market, when stock prices drop, you know if it's time to get out or if it's time to stay and be patient. That's what I had for you today. I'll see you in the next one.